Hi, this is Zach Meir from Zach's Traders Cafe with a look at the major markets on Wednesday, the 3rd of August. Starting off with the FTSE 100, and it seems to be rather more clear that we're in a rising wedge bearish formation here. Obviously, we've got the run up to the Bank of England announcement tomorrow, and then on-farm payrolls on Friday, and that normally means that markets after a bull run will like to stop out and take out support, and then actually reinstate the bull argument afterwards. Probably the best way forward in this situation is either to look to buy support around the initial July high 66.12, or to wait for an end of day close back above the 10-day moving average, currently at 67.12, before pressing the buy button again. Onto the German market, which has actually fallen rather more aggressively in recent days than the FTSE 100. Here we've got a situation where the top of the range, 10,400, basically came into block progress. We've got initial support here at the 200-day moving average at 10,079. End of day close back below that would suggest that we could be back to fighting within this range from 10,400 down to 9,300. But early days yet, probably wait for the 200-day moving average as the decider on what happens next. Onto the US markets, and for the Dow, we've got a situation where we've closed back below that 10,390 gap. We've also closed back below the 20-day moving average as well at 18,387. While there's no end-of-day close back above the 20-day line, there's the risk of a retest of that old April peak, which was at 18,167. But still relatively early days as far as suggesting that a big bearish scenario is on tap here for the Dow. Moving on to the S&P, and that was always a little bit more bullish, relatively speaking, than the Dow, but it has broken back towards the 20-day moving average, just below the current level, or yesterday's close, 21.55. End of day close back below that would suggest we're going to head back towards former resistance around 21.20 to 21.30 on the way up. But otherwise, at the moment, it's still a buying the dip situation rather than going aggressively short. For the Nasdaq, which was effectively the star market going into this week, it's interesting to see that we've tested the 10-day moving average, currently at 46.93. While we remain above that on an end-of-day close basis, still will remain loyal to the bull argument here, which would suggest that we could still head towards the dizzy heights of 4,900 plus before this market peters out. Indeed, the current situation is that we do look as though we're actually delivering a sizable breakout for US tech stocks. On to sterling or cable. Here, the recent grind within a narrow range seems to be trying to resolve itself to the upside, which sort of suggests that the market doesn't believe there's going to be a big move on rates tomorrow. Best thing here is probably to regard the market as being, or this cross as being in a triangle formation. 134.50, the top of the triangle there, support there around the 132 level, which is the 10-day moving average, and really one would trade that range until there's an end-of-day close outside that range. Still with the RSI at 48, the bias is towards selling into strength rather than buying the dips. For the euro, we were looking for a big break from 112 up to 114, which is the former resistance. Hasn't quite happened like that, but we're still above 112. And while above that, really, there isn't any resistance or obvious resistance until June highs at 114. So go with that. Early and end of day close back below the 50-day moving average at 111.56 would hurt the idea of a break to the upside for the single currency. Dollar yen, probably the main driver of recent stock market weakness. And the situation here is that we're looking at almost what seems to be an inevitable move towards the 100 level Solid move to the downside on Friday, continued there for Tuesday, and really at this stage it seems almost inevitable that we'll see 100 and then maybe even that June support at 99. This stage only back above 103, and the initial high of this week and August would delay the downside scenario for dollar yen. Star market for yesterday was gold, with the situation being that it made its best intraday close in basically over the last year. We're looking for further progress here towards 1400, rising trend channel, which can be drawn from the end of May, running towards the 1450 zone, and that could be hit as soon as the next month, especially while there's no end of day close back below the 10-day average and the floor of the channel at $1,339. That's it from me. More updates at the same time tomorrow.